Hello and welcome back. It's time now to take a look at the top business stories. Retail bankers optimistic about the future and consider regional consolidation. European central banks restrict sale of gold amidst unstable economic conditions. And the CEO of Fly Dubai says their latest finance agreement reflects confidence in the airline. The GCC markets had a mixed run today, with a similar trend across the local bourses. The Asian markets opened up the trading week on a positive note. The DFM lost over 1% to close at 1,699 points. MR Properties lost nearly 2%, while Arab tech shares were down by 0.5%. DR as well as DO lost nearly 1%. Dubai Islamic Bank gained nearly 1% following government approval to increase its stake in Tamwil to 57.33% from 21%, becoming the largest shareholder in the mortgage lender. 154 million shares were traded, valued at 254 million dirhams. And turning to the capital, the ADX gained nearly 0.5% to close at 2,664 points. Shares at TAQA climbed nearly 1%, while Etisalat was up 1%. Aldar Properties lost 1.25%. 53 million shares were traded, valued at 112 million dirhams. Dubai has announced that it has mandated 3 international banks as joint lead managers for a benchmark US dollar bond, which will be launched shortly. Its proceeds will be used for general budgetary purposes. European central banks have moved away from selling gold as a response to the economic downturn and Europe's sovereign debt crisis. The Financial Times says that the signatories of the central bank gold agreement, which limits collective sales, sold 6.2 tons in the year ending September 2010. This reverses an earlier trend where the banks traded bullion for sovereign debt. 497 tons of the precious metal was sold in 2004 to 2005. Gold prices continue to reach new highs, with bullion hitting a record $1,300 an ounce last Friday. For an analysis of the market, we're joined by Gaurav Kashyap, the head of the DGCX Futures and Options Trading Desk at ACM Middle East DMCC. Gaurav, welcome to the show.
Glad to be here, Laura.
Now, as we just saw, gold hit the 1,300 figure. The question is, when will the precious metal level out?
Actually, Laura, you're right. The gold hit a very magical figure of 1,300 on the back of a lot of different reasons, actually. We had the Fed come out during their FOMC meeting last week saying how they might need to pump more liquidity into the U.S. economy, thus spurring gold on to reach these all-time highs. Now, back to what you mentioned about the European central banks limiting their sales of gold through the CBGA agreement. What we saw is a 96% drop in the amount of gold being sold by the central banks. If you just look across the globe to China itself announced last year that they're doubling their gold reserves to 1,054 tons. Now, what this shows us on a long-term perspective is that the bullishness of gold looks very good for the future, and it should present a very good psychological support level for the precious metal. What those levels do seem to be for the short term is we're looking probably for it to naturalize around 1285 levels. Upsides during this week should be towards 1310 levels.
Now, the UAE markets closed on quite a bullish note last week, with the US dollar weakened off the back of a German IFO performing better than expected. What can we expect for the US dollar this week?
Honestly, Laura, it looks like it's going to be a really mixed week for the euro this coming week. The reason I say this is that, yes, we did close the week on a very strong note on Friday. We saw the Dow close above 1.5%. The Asian markets opened with a bang this morning. But, we're a bit reserved and guarded towards the recent price action in the euro, especially on the upside, because if you have a look at the government bond yields between the German and the Portuguese 10-year bonds, you'll see a continuing divergence between the prices, which kind of hint to us that the contagion risk and the contagion fear is not totally out of the Eurozone yet. What we are keeping an eye on is a couple of very important numbers which should guide the figure of the dollar this week, GDP being one of the most important ones coming from the US. Overall, we're probably looking at the euro trading between a range of 132 to 130 on the high side.
Brill, well, thanks so much for coming into the studio finally.
It's always a pleasure.
Brill, thank you. The Middle East retail banking heads gathered in Abu Dhabi today to discuss issues relating to the health of the industry. Topics under discussion included expansion plans and as to whether there is scope for the market consolidation. June Riley reports.
In stark contrast to the feel of second half of 2008 and 2009, CEOs and other executives of the region's banks were more optimistic in their strategic growth plans for the MENA region.
Well, the major growth factor for the economy of the Middle East is going to be the oil price, which has continued to be high and relatively stable. So that's going to keep the economy growing here, and that's going to have a big impact on retail banking. We've also got a growing population, which means that there's more customers. So that's obviously another boom factor. And there's also the increasing diversification of the Middle East economies.
Banking officials highlight some of the macro trends for regional banks and what they hope to see in the next 5 years.
More and more consumers are asking for wealth management products. I mean, they want to save, they want to invest, and so on and so forth, basically. So consumer bank is not anymore about providing loans and issuing credit card. It's more about providing a comprehensive services. What I'm hoping to see in the next 5 to 10 years is some mergers that could happen among banks in the Gulf area that could create a regional bank with a consumer banking offering, basically.
M&A activities in GCC banks were also a hot topic, as there are over 50 banks in the UAE alone, begging the question, is the market saturated, and where does one look for growth?
In order for the bank to grow and achieve its growth potential, we have no other option but to go outside the UAE market. The market, I feel, for a bank like us has reached like a saturation level. We continue, of course, to focus on the Government of Abu Dhabi related projects.
As retail banking operations in the region have weathered the financial crisis, banks at today's conference were taking stock as to just how far they've come in the last 24 months and are focusing on the future. The key takeaways included regional consolidation, product development, customer retention, stronger compliance, credit regulations, all in order to navigate these challenging market conditions. June Wrigley, City 7 Business.
And in our fast financial news, Standard & Poor's has lowered its long-term issuer credit rating on Jebel Ali Free Zone to B from B+ and removed it from Credit Watch. The rating agency says the company has uncertain standalone financial profile after the refinancing of its 7.5 billion dirham sukuk in November 2012. And Etisalat officials have told City 7 Television that the company has not blocked iPhone 4's FaceTime application, which allows users to make video calls. The telecom provider is in talks with Apple to clarify the reasons for the restriction of the service in the UAE. There were mixed results across the GCC markets today. Let's check in on those numbers now, starting off the UAE general indexes. Coming up now, let's take a look at the major international currencies against the dirham, followed by the price of oil and the precious metals. On the way after the break, the CEO of Fly Dubai, Gaith Al Gaith, discusses new financing for the airline as well as lessons learned from Sama's closure.